Good morning. Yeah, good morning. So now because we're trading above the 5 minutes, so having this CB. Now what I want to believe is we might as well want to trade back into yesterday's first presented fair value gap. So I want to see if it can give me a fair value gap here. So I want it to give me a fair value gap here. So will it do that? So we have a fair value gap. And now we are trading into it. So we want to see if it can maintain trading on the upper quadrant and we don't get a down close. Yes, the wicks can do that. So the body has crossed below at the lower quadrant. So that means that we were only trading into these 15 minutes. What fair value gap here. So now because we've traded lower, you're watching this 5 minutes CB, so it's also an IFVG right there. reversing the position long. Stop below these levels. Now I want to get this vice, this high, and probably that first pivoted fair value gap, if it can, if at all it can do that. Not good. Yeah, so now this is our last one. This is our last position. So if you're taken out, because in here was some kind of consolidation, accumulation, then manipulation into that 15 minutes fair value gap. Then we had this nice DC. We create this short-term low, then lower high compared to this. Now we are breaking below this low. So I want to believe now that's our shift, market structure shift, or CIC. So however you like to call it. And also the fact that it's giving me a fair value gap here. So we are trading below this low. So if this fails, then you're going just to be watching. So remember, there's a low probability trade. So everything I've been doing here is simply under low probability market conditions. So that's why you see me enter with three. So in these other days, you normally see me enter with five. If it's okay, five, I normally use it also in low probability conditions, and most of the time, I normally use 10. But then three, it's not. I mean, it's nothing. So on the 15 minutes, we had this CB here. We had this CB. So if at all you can get, I mean, the next 4 minutes, if you can close above it, then that's it for us. So that means that we'll be now trading into looking to go higher into this level here, and then maybe later in the day start looking for, I mean, any signs of it going lower, something like that. Yeah, so if we trade above this, then it's game over. It's game over. Yeah, so I'm normally confident taking losses. So when I'm not sure of what it's doing, like today, I'm not sure of what it wants to do. So that's why you saw me go short, and then also second time go long, and now again go short. So it's flawed logic. So it's not giving me something that I want to see. But then I'm just executing on three three contracts only. So that should tell you that it's a low probability condition, and it's only $65. So just to watch $65. So it's not too much of a loss. So $65, even if I lose that, I mean, I don't feel a thing. I don't feel any fear. Okay, I don't feel anything in nature. So it's normal to me. It's like risking nothing. So these are the loss. When we were taken out here, it was less than 100 points. So that's like around $30. Yeah. So again, it's a little amount, but then I'm just here to show you that I too get. I mean, I also do get it wrong. Also, if the conditions are unfavorable, I also get it wrong. Yeah, Niaje Caleb. Yeah, so I also get it wrong, and it's normal. So we are calling the next 1 minute. If we get an up close into this level, then it's game over. So that simply tells you that this pullback was just the manipulation move. So because we've not taken out this low, so it's something like this. So from this low to this high. Yeah. So right now our stop is above the 75, right around the 75 quadrant level where we wicked here, and below 25 level we fail to take out this low and create this other low. So if at all you can break above this level, get an up close in the next few seconds, then this high here, most probably we're going to repeat it and maybe trade back into this first presented for value gap. Yesterday's first presented for value gap. So on the 1 minute we had this fair value gap, and it's like you can see we trade above it. So if it really wants to go higher, then there's pullback into this. Now an IVG needs to push it more higher. Yeah. But then again, we've taken out this short-term high, as you can see there. So if it's supposed to go higher, then we don't want to see it trade low again. Because now if it's going to trade lower, then that means that we now want to go lower. But then this level needs to hold it and push it higher. So this is our last line of defense. This high here. Yeah. So if it can trade into this high, then that's our this. I mean, now we are taken out. Okay? So there's IVG. So the way it's holding price, so we want to see it now push higher and maybe take out this. But if we can get below it, so anything can happen here, because it's not like price has really been doing anything important. So it's just been doing this. And then we had that expansion, and then we had this. So initially at 2, we trade into this the so-called volume imbalance here. So this volume imbalance, we see price trade into it right there, and then we get this nice drop. So we trade into that volume imbalance, and then we have this nice drop. So that's what warranted my first entry shot. So my first entry shot, I wanted to see it trade low. But then it's like price has other plans. Yes, I wanted to see it trade lower, especially now that it gave me this volume imbalance here. So I saw it reject the first time, and now, okay, it gave me this, and email it hit into this level. I went short, but then later was taken out. So my stock was here, slightly above there's 5 minutes fair value gap call. I was of the opinion that if we can trade above these 5 minutes fair value gap CB, then that now warranties an up move, and that's why now you see me get another trade going higher, and also it failed, so it was taken out here. So right now we are really struggling around this level. So the 15 minutes CD, we are really struggling around this level. So there are some of the conditions that should always avoid at all cost. Yeah, conditions like this, it's not favorable. But then if you can identify them, then if you just enter on one contract, not bad. Yeah, because with that you'll not be risking a lot. So you'll not be risking a lot. So like for instance, I showed you that here I'm only risking around $66. So $66 on a 25K account, I mean, that does not even move anything. Does not move a thing. Yeah, $66. Why? Because the conditions are not good. Conditions are not good. So same to yesterday, you saw me use five contracts. So anytime I'm using any less than 10, that means that I'm satisfied with the outcome, because the conditions, I mean, it's a 50-50. Not really, not even 50-50. The conditions are oddly against me, okay? So it's now like 70-30. So there's a 30% chance of me winning. So the fact that I've made peace with that, so if it happens through some murky affairs, if it happens that I win, then still fine. If it happens that I lose, still fine. So if we can now close lower, trade below this there's a gap here, then that will be now good. That will be perfect. So right now we don't want to see it rejecting. So you want to see it close, expand, and maybe trade below this level here. You don't want to see it rejecting higher and getting an up close. So we want to see it give us this displacement. So that simply shows us that this level kinda is holding. So right now, until we can get below this, that's the only time you can be really sure. But also on the 1 minute, we had this IFVG here. So this IFVG will really trade below it. But still, on the 5 minutes, the reason why I'm interested on 5 minutes because it's normally the 5 minutes that will give you a clear perspective of what price wants to do or where it wants to go. So if on 5 minutes we're still staying above this level, these two lines that I've highlighted here, then it might still return into these levels. Yeah. But if we get a down close below this level, then these levels we're now going to use them as resistance. So any return into these levels. So we want to see once you trade below it, we want to see it return into these levels and hold price going lower. But if we still staying on top of this level, then anything still might happen. Yeah, anything might happen, and we might as well just trade back into this level again. So from that high to this low, so we trade back into the 25 level, but then still we are staying above these two lines. I don't know which color is this, but two blue lines. Let me just name it two blue lines. So the fact that we are still staying above these two blue lines, yeah. So until we get a down close here, so in the next 1 minute will be the judge of that. So if at all we can trade below it, So again, until we trade below the, yeah, until, so if it still rejects and get an up close above this, then it might as well just trade back into the, but then if we get a down close, then that now will be a sign, okay, that will be the market telling us something. But still remember, it can still reject. So using this 5 minutes chart, so I'm not interested in what the 1 minute and 3 minutes is doing, or the 2 minutes. I'm only interested in the 5 minutes. Yeah, so we'll trade lower, and it might have now return into this level, and then we want to see it push lower. Yeah, but now any efforts of it now trading up here has been minimized. Yes, it might do that, but then we don't want to see it do that. Why? Because it has given us a down close below this level. So yes, might still do that, but then the bodies want to see it stay below this level or just inside there. But then because of the price action, it's really sloppy. So we are not in a hurry. We are not in a hurry. So we'll just have to wait. We have to wait and wait. So on the 15 minutes, this CB, we can see we trade into it, and this CB is now holding price. Also remember, on the 15 minutes, we're also having this volume imbalance. So again, the volume imbalance will trade below it. So these normally just act like as fair value gaps. So fair value gap, once you trade above it, so this happen. So what happened? If any trade into it need to hold price going higher. Any trade, if at all we close below it, so any return into it needs to hold price going lower. But then remember, the wicks can always normally, will always be doing the damage. So what we are interested in is the body closes. So the weights might as well trade high again. So remember, still this is the 5 minutes. So that's crazy. So it again turned into this. Yeah, so now because we trade below this, and again it has now traded into this level. It's now not good. It's now not appealing at all. So right now, if we break below this low, so guys, such conditions are normally difficult. So right now, if we take this low out, now I'm now free to now scale my stop loss. But then not to break even because the conditions. So in short, what I can say is, so accumulated then manipulated into that 15 minutes CB. Then we have that high, this low, this high, and then where this low. I was utilizing the shorts because of a CB here, but then we really struggled and took out this high. So we had this low, this high, low, lower high again, then we break below it. But now remember, inside this price level, we did not break it with speed and this. And so again, what happened? So it did its thing. No one was anticipating that. And then now it's now breaking lower with speed and distance. Now again breaking below this low. So it's like all of this, it was simply waiting for time for something. So I don't know what program, I don't know what news. It's really crazy. It's like it was waiting for something, and so we have that, and we're taking out this low. So on the 5 minutes again, see this CB holding. So this sells, on the 15 minutes, we see it has again registered that level. And then we see we have that nice rejection. So on such days, it's normally tricky, really hard to trade. So I'm also watching this low here. But then all in all, just remember that whatever it's doing here, it's just ranging. Yeah, it's just ranging. So how do you know that it's going to be a um, difficult condition to trade in? Just look at what price is doing. If it's ranging, just know that it's going to be difficult. So from that, you can decide now to lower your risk. Okay, you lower your risk threshold, and if you can use one contract, not bad. If you can use two, but then don't use more than, don't risk even more than 1% of your account when trading such conditions. Because for me, I've told you, these are 25K account, and my risk right now, I'm risking $48. So $48, it doesn't even move a thing on a 25K account. It doesn't move a thing. We have to 15 minutes market structure shift. So where is that? Where is the 15? So still, the reason why I'm even short is because in as much as I still believe these highs here, we might as well take them out and trade into yesterday's first presented fair value gap. But then London session, because it's doing this, so I feel like it's going to find difficulty trading into that level, of which again it might still try and trade into that level, but these lows here, this low and this one, relatively equal. So these ones are really smooth. So what is it doing now? So on the 5 minutes, so again trading into this. So right now, whatever happens. So again, remember it has taken out this low and trade below the 2-day open. But then it's just ranging, just ranging. So we are not doing anything with it, and if it can trade back into this level again, then it will now be peaceful. If it just takes us out, because we've really nursed it for a long time. Seems good on your side. I think it's gonna range till this pitch. Yeah, yeah, true, true, true. That's what we also anticipate. But then such conditions normally not advisable to be trading in unless you know what you're doing. But then in as much as you also know what you're doing, so you just have to, yeah, prime your mind and be ready for anything, because in these markets anything can happen. So anything can happen, and the risk is there. The risk is always there. So if it takes you out, well and good. Because I don't feel like there's a single trader who normally don't take losses. So losses are part of the game. So right now this level has really proven to be a support level. So email we opened here. So the 2 day open. Email we opened, so we just tried week. I mean, so we just had that week low, and then it held price the first time, the second time, the third time. Yeah. So it's been holding price. So until now we found another resistance level, so that 15 minutes CB. So we did that, again that, and this level. This is some true level here. So today's pitch, we don't know how it's going to run, because if you look keenly, last time we had a speech, it was this day here, around the opening of that price. So this day, we normally call this Trump's candle. So this was the day Trump threatened China with 100% tariff. So something like this happened. And also today, if you can see where we are trading right now, it's around opening of this candle. So we don't know what's going to happen. So we might trade lower. This level again might hold it. We don't know. We don't know. This level again might hold it. But we expect for it to be crazy. Maybe a war in Iran, or I don't know, something crazy might be looming. But then we just have to wait. Yeah, so we have this come. So this was around over 1,000 points, over 1,000 points, 1,161 points. So just see, that's crazy. That's crazy. So that's crazy, man. So if you compare it to these other candles, so you find that these other candles are normally just, let's say that a few around 600. Then that one had 1,000 points. So right now we're breaking below that. So let's just take one off, just to be safe. Yeah, let's just buy one, just to be safe, and at least book something, because we already took some losses here. So you see this level now. So on the 5 minutes we do this level, but then now see what this level had for us here. So it held price once we trade into it. So right here we said if we can get a down cross into these 5 minutes, these 5 minutes volume imbalance, so around here, then we don't expect for it to trade into this. But then this one happened all of a sudden. Yeah. So this happened all of a sudden. But now the fact that again we trade into this, so what happened that this was now expected, because we now left this area with some speed and distance, leaving us some fair value gaps. Yeah. So now that this level held price, now we are trading lower, and we've taken out something there. In as much as I might be tempted to now move my stop again. So looking at the 15 minutes chart, yeah, 15 minutes chart. We're only having this little candle here, and the all of this. So if we can get a down close below this, yeah. So this candle just closed here, and now not reject. Not sweep these lows and now reject. So if we can close down here, that will be fine. That will be fine. You notice you can hold trades to the next session. Okay, at times it's normally difficult and crazy to do that. But then what normally happens, if you can hold to the next session, what normally happens that, for instance, this move here, I can again take another partial once we break below this low, I can take another partial and then just leave one runner. So that one runner, once I leave a runner, I scale my stop loss to break even and then just leave it run. So anything can happen with that one runner. Either it can keep going lower and lower, or if at all I was in a uptrend, I was buying. So I just keep one runner and it keeps going higher and higher. So the deal is simply that you remove the risk now, yeah, because the next session, most of the time, the open is normally crazy. So it might keep on going either to your TP or return back into your entry. And if at all it returns to your entry, which is a red flag, so that means that at your entry to find your stop loss scale to be, so it won't be of any effect or any impact. No. But now you see with trading Nasdaq, if you want to be that type of a person who doesn't take partials and also doesn't scale the stop loss, so most of the time you'll be cooked. Most of the time you'll be cooked because this thing, it's highly volatile. So it will trade into this level and again trade into this level within no minutes, and again trick at this low, take out this high. So it's normally volatile, and it's normally so easy to go until it. Yeah, so that's one of the demerits of trading this pair. Yeah, so unlike trading currencies or unlike trading gold or forex pairs, I mean, with those you can hold once you know the direction. Same to this one, you can hold once you know the direction. But then in such conditions, you can't. In such conditions, it's normally difficult. But then you find that these conditions are normally some of the easiest and also some of the most difficult ones to trade in. So the easiest because once you identify a support and resistance level, so it's normally that price will most of the time be revisiting those lows, and but then they only work for a short period of time. They don't work for a long period of time, only for a short period of time. So let's say there's 15 minutes candle, this 15-minute candle. So are we going to at least close below this 2-day open? Yeah. So this is the 2-day open. The price level where it has been holding price, it has been keeping price at bay. So this level here has really been so look at the bodies. So the bodies are staying above this. So that simply tells you something. That needs to tell you something. So we also had this fair value gap BC. But then look at the way the bodies are respecting this level here. Yeah, so that needs to tell you something. And also again, right now, the bodies are again staying above it. Yeah. Because we now the 15-minute candle has now closed, but then the body is still staying above. So at least we wanted to see the body remain lower, but then still no damage because it's not like we were anticipating such a big move to take place. Yeah, we're just hoping that maybe it can again trade below this low. And this level, we've really exhausted this level. So maybe it might be the time to now maybe go below it a little bit. So let me see 1H. Yeah, so Caleb, I mean, holding your trades, I mean, it's a matter of understanding how you normally, how your system works. So if your system entails taking partials and scaling stop loss, then most of the time just hold, I mean, you can hold them, you can leave a runner. But then if your trading system entails waiting for price to hit TP, so that simply means that you should not be moving your stop loss. You should just let your stop loss remain where it is and then target your TP, which might happen or might not happen. So for me, my system, I have to take partials and I have to scale my stop loss. So right now, remember, if we can go below this low, yeah, the way we had this upwards curve, if we can now go below it, then now it's going to. So what retail traders call support turn resistance. So once we break below it, so support. So this was an area of support. So now turn resistance, and then push lower. So still we might anticipate something like that. Okay, because it's taking too much time there, I also want to take another one off. So right now we are remaining with one position open. Yeah, because we also understand that this level here, it's an area of so this the true day open. True day open. It's really crazy. So it's been holding for. So how many times? The first time, the second time, the third time, the fourth time, the fifth time, the sixth time, the seventh time. So now, until now, if we break below it now, then there's going now to be a support and resistance. And that's how people call it. I mean, the retail logic, the retail mindset. But then, why was price staying around this level? It's because we were having these fair value gaps here. So you see how that works. So on the 1 minute, here we broke above this high, speed distance, return into the fair value gap. So it kept resisting this level. Also on the 5 minutes, it's there. So there's gap here on the 5 minutes. So we kept on resisting it. So we kept on trading down into it. So the weeks, the weeks, the weeks, the weeks. So right now, if you can break below it, then probably this is the next target now. Because any loss that was resting below this will taken off. So might want to see this level traded. And also we're about to close the London session. So 5. So just remember, if we can break below this level, this low here, then now it's game over. So you might want to see lower prices. But then also remember on a higher time frame, so we are still inside this range. So this low to this high. So this is the range we are dealing. So this is our dealing range. So this low that I highlighted on that lower time frame. So this is our dealing range. So this low and now this high here. So once we break this low, we might expect something like a trailing maybe higher. Or again, if we really break below this with speed and leave us a fair value gap here, then we want to see it trade into this. And maybe on the early hours of the open, if at all we manipulate lower first, then this might be it, and then maybe trade back into this first presented fair value gap. But then it's not like I want to see it trade up here anytime soon. Yeah. Maybe until tomorrow or something like that. But then if we are really bearish, yeah, if we are really bearish, because for now I'm really bearish on this market. If we are really bearish, then any return, any pullback, then this level here, I'll be watching during the AM session, New York AM session, which I normally live stream on TikTok. But then, regardless, if during the AM session we trade higher first, then these lows here will be the next target. So these lows here, I really love them. So this level is really smooth. So this low and this one, really smooth. So the retail logic, they believe this level is a strong support level. So anytime again price is going to trade into this level, they're going to treat it as a support and frame their longs from this level. But then for us, we know that these levels are really smooth and we're going to make them jagged. So really smooth, we make them jagged. And also any sell stop. So those people want to trade on the market's weakness. So they have their sell stops resting below here. So those sell stops, we're going to dig this level deep. So that's what I mean by we make it jagged. So we dig it deep to the point that we introduce those sell stops into market orders and then flood this area with liquidity. So liquidity is how fast a market can buy or sell. Yeah. Partials make sense. AM to PM reversals are higher time frame driven, and often big enough to take out lower time frame stops. Yeah, true, true, true. So yeah, I always feel like if you can build your system around taking partials and scaling your stop loss on this market, I'm not talking about currency pairs. So currency pairs you can do whatever you want, but then on these markets, then taking partials is a must and scaling your stop loss is a must. So that's part of trade management. So trade management. So all of those things I still taught. So in the next 4 minutes, still this level, it's still holding. So this candle now, we want to see it break below. But then if again we close above, then that really should be disturbing. That should really be disturbing. So right now, above price and below price, we are having two things. Okay. So if at all during the AM session, New York session, I'll be coming to the marketplace. So remember, Trump is also speaking. So if we come to the marketplace after one side as it, so we are having two major draws of liquidity. So we're having this new day opening up here. see this level, and we're having yesterday's first presented fair value gap. So first presented fair value gap, new day opening up, and also this relatively equal lows, some really smooth level here. Yeah. So these will be my pools of liquidity. So if I come to the marketplace and find out that one pool of liquidity has not been taken out, then I'll be looking to take it to the opposite, to the other pool of liquidity. So let's say if you take out this low, it will depend. Yeah, if you take out this low, by the time Trump is speaking, then price can do two things. So might continue lower or reverse into this level. So inside these levels, what you're simply watching for is time. So time and then price. So time is the determining factor. So time comes first before price. Time before price. So it doesn't matter what price is doing. So if it's outside of, if it's at a key price level before time, then it's useless. If it's at a key, if it's time, but then it has not traded to a key level, then that time is useless. So time and price theory, if you can recall what ST said or taught. So today we had this, how do we call it? Volume imbalance. So at 2 a.m., at 2, right there, at 2, we trade into that new day, volume imbalance. Then we get that move lower. So in as much as it's in a consolidation. So it's like we are breaking below this low. So that's good. So if we can get a down close below this level here, the way it's doing, then this low is the next target. Yeah. And what's resting below the sell side liquidity in form of sell stops. So those who went long here, the stop losses are resting here. Those who want to take the market lower into this liquidity pool, their sell stops are also here. So what happens that this level here, it's a key price level. But then it's not like we want to really do anything with it. It's not like we want to do anything with it because of time. So this price level, it's useless to have. But then if we can drive this market into this level, then I feel like that will be all for me. And I'm just going to have to close it and come after Trump has spoken. But then also remember that after Trump has spoken, one or two things can happen. So the market might get sloppy. Yeah. Also if we get a whipsaw. So anything can happen. So maybe anything can happen in this market. So if we get a whipsaw, maybe clear sell side and then trade also into this level. So such is possible. So the way we normally see FOMC. So FOMC events are normally a two-way delivery. So it normally clears the upside and buy side and the sell side. So most of the time you find that once it has done that, so we're getting a close on the middle. So that's a whipsaw day. So it's normally advisable if you were trading London session, avoid days after such an event has occurred. Or you might find that once you get a large range, then the rest of the M session is going to accumulate or become sloppy. But then I doubt because whatever we're having here is a simple accumulation. So maybe during that time might be manipulation and then wait for return. So I did say if we can get below this, then I'm going now to liquidate. Yeah, because also time remaining around 10 minutes to London close. So in as much as we've really struggled. So the first shot we were liquidated there, then trade going long, taken out, and now short again. Then we sat through all of this. Yeah, it's really hard to believe that it has delivered. But then what we know is that now, if at all, okay, if at all you can reach this level here, then my interest will be this level here during the PM session. This level here. So there's a way in which you can be coming to the marketplace with certain ideas or certain concepts. But then this level here, if I was the market maker, I have to revisit this level here because right now we have so many orders scaled into this. Yeah, so if you look at the 1 minute time frame, these are simply, so if I remove this, just a minute. So this level, we are really having some equal highs here. So this high, this one, and also this one. So it's really some relatively equal highs here. And also another context, this was the beginning of an market maker by model. So we have original consolidation, expansion, return into the original consolidation. Then we have that distribution lower. So this is the distribution block. We trade back into it and then deliver lower. So right now, this level also, we need to be watching it. But then for us, we've already liquidated our positions there. So now not interested in anything. But then we've really struggled a lot with it. But finally. So this simply tells us that the conditions in the marketplace are really, they are really hard to trade. Yeah, because of this. It's really hard. It's really difficult to trade. Because if you can sit through all of this without being moved. So for me, I was moved. So I was a little bit confused. Yes, I admit that normally happens to me. So you find that I'll keep on doing this. So it's normally more of a guesswork. So this other one, this second one. So I normally tell myself it's normally a guesswork. But then I now snap my mind out of it and remain with the first idea. So to me, always the first idea is always the right one. The first idea is normally the right one. So for instance, yesterday, what happened, in as much as we really gambled, so what happened that my first idea, so I normally trust it to be the right one, the correct one. So yesterday I was kinda short. So we had this, so we took out this buy side. We took that buy side liquidity and price gave us this low, then lower high here, break below it, and then it gave me this. So this void here. Yeah. So immediately it gave me that. So you see it traded back into that level. And I wanted to see it go lower. So I went short here, trusting that if it returns it to this, then it's going to do that. So it tried doing that, and then my stop loss was hit. So here I was telling my audience, my live audience, because I was live. So I was telling them if it close above this, then I'm liquidating it. So my stop I guess was around here. So if we can get a close above this, then I'm taking it out. And what happened again? So my initial idea still, I saw this once you took out that. So this ran. So I wanted to see this to become a breakaway gap. Then this one a measuring gap. So immediately I saw it trade into that. So I was expecting for us to trade now to run below this first presented fair value gap. But then what happened? It simply took me out. So I was also watching this fair value gap here in form of a CD, and you can see it also traded back into it there, right there. So what I was once we break above it, then I reverse my trade. So the same thing that has happened. So I normally have these levels in mind because you're having this low, high, lower, low, break above, speed, distance, fair value gap. So I was not expecting for price trade back into this. So once I got in here, the only thing, as I was telling my audience, because I was late, so I want to see trade back into this upper fair value gap. So this upper fair value gap is called what? A measuring gap. So this is a breakaway gap. So if it's really bullish, then it only needs to trade back into this. And we could see this. So I failed. So I was not in the marketplace during this time, but I could have taken out something here and merely traded back lower into this. So again, we were watching it through all of this. So I was saying, yeah. So I was saying something like, if so, I drew a certain line here. I say that I'm taking partials and then scaling my stop to break even. But then I did do that, so I didn't follow everything I was saying. But as we were doing this, I was training my audience, yeah, that so before we did this, so I was telling them about three drives pattern. So three drives pattern is a scenario whereby we have something like this. So we said this before it happened, and it did happen. So immediately we did this. So I say that if we're taking out this high, then it should not take it shallowly. So we want to see it rip higher with speed and distance and give us a fair value gap. But then it failed, so it just turned lower, and so I was just seeing it. So by then I scaled my stop to break even because I entered here, my stop was taken up there. So that was a break-even trade. But I was saying that now that the fact that it has given us these three drives patterns, so this swing high, swing high, swing high. So what happens that smart money are now pairing in their shorts. So they are now preparing their short positions, and this market is no longer going higher. So what happened? It didn't go higher. And also I say that if we can get a trade a close below this, so any return into that, that's your position, that's your signal to go short. So what happened? Trade back into it. So here could have been your area to go short, or just wait for 1 or 130. But then if we trade into this level, It's normally advisable go short, stop, swing high here. But then for me, I normally just put it above here. So if you can go through my recordings, you'll find that there's normally one of my system. Once you trade below it, any return into that, my stop, just there. But then you have to backtest it for your case, okay? So again, what happened is that even inside this low, it still gave a setup. So we have this high, low, higher, high, break below. What's this now? A breaker. So try into that and right, just fell out. So 130, if at all you missed that 130, 130, this normally something you can wait for. Wait for, because you're now bearish, wait for price to show you something. So it gives us this fair value gap. Yeah. So this fair value gap now. So yesterday, as this was happening, I was with my student and I was highlighting for him all of this. So 130, so I told him, as we were trading here, I told him, well, you can always wait for 130 and this return into that. That's your, chance to go short. Or again, wait for 230. 230. If 230 doesn't give you something, wait for 315. So 230 was there. Wait for the pullback. So did that. Once you break below this, 315. Also here, 315 right there. So there are some of the time levels that if you can know, if you can afford to understand, then you'll really be unstoppable. So 230 gives us this high low, lower high. Then once we break below this low, so it's not like I'm highlighting these things after it has happened. So most of the time these are the things that I look for and I normally highlight them beforehand, okay, before it happens. And then I normally enter. So there's like a mitigation block. So from this low to that high, any return into that level, and then time, consider time. So time 315. So 315, 318 right there. Go short and deliver to your target. In as much as it will be sloppy, but then this last hour, it's normally, it's normally difficult to trade. So always anticipate these pullbacks. It's normally like the London session. But then just target 1 to 2 low hanging fruit objective and then be done with it. Channel 9. Yeah, channel 9. So we had that today at 2 we trade into a level, a key price level. So what normally ICT talks about. So once you trade into that key level, ICT tells us that 2 a.m. wait for price trade into a premium. So trade into that. And for me, my time. So if you're here with me for a long time, you understand that my time is normally this. So I don't care about anything that's happening before 245. So 245, that's when I want to come to the marketplace and see if at all I'm having any pattern, any price, anything that has this form, low, high, break above, return, and then boom, or vice versa. Or if I don't see such a thing, then I have to wait and see the context of any higher time, 15 minutes, or what's happening in 15 minutes. So 15 minutes, we were having that CB. So in as much as I believe we were really weak and we really wanted to go lower, but then it proved me wrong, so that's fine. So I normally have 3 executions in a day. In every session or in a day, depending with the conditions of the underlying market. So if the conditions are that good, then I normally risk 1%. if I lose the first one, I scale down 0.5 and then 0.5, of which it's normally difficult to lose the 3 executions. So if I lose the first one and maybe the second or the third one, I normally snap out of it and think of my original idea. So that most of the time, 90% of the time, my original idea is normally it. So that is taken out again. It gave us now this signal, this one. So I wanted to see it run higher, but then failed, taken out there. But then what did price do? So I was watching this high low, lower high, lower compared to this, and then we broke below. And I saw this fair value gap. So what did I say again? I'm just coming to the marketplace to look at that pattern that I drew here. So something like this. Yeah. So high, low, that. And why did I not choose this? Because I was bearish. So this long here that I took, I was considering this, but then looking at that 15 minutes and my initial idea, so was taken up there, and we had the once we broke below this low. So my long here, my stop was just below this low, because I was saying that if you can break below this low, then there's the pattern now. Then once you break below this low and now reverse and sat through all of these, and also I was having this fair value gap here, this CB, that CB there. So in as much as it was really difficult, yeah, so I was saying if you can go below it, then we have no need of it. But then it was really difficult. So you guys saw me highlight it and also tell you that if we can get a close below this, then it's not possible now to trade higher. But then the market proved me wrong, of which that's good. Yes, I love to be proved wrong. So it proved me wrong by giving us this expansion. But then this was just a sucker play. So no need to panic because we've not taken up our stop loss. So what happens, we get that. And once you break below this low again, so there's also another setup. This is normally my second entry setup. If we can do this, break below this, then I normally treat this as a low, break below, squid distance, fair value gap. It's only returning to any fair value gap above price, and then continue with the shorts. And now we were doing that, and it's like, damn. Okay, it has not tried below into this our line. So right now time now does not I mean whatever price doing now, I'm now not interested because we are now trading past the London session. So it's now London lunch, and it might as well now seek any liquidity, yeah, left in price, and then maybe during the AM session we come to the marketplace to look for what price wants to do. Okay, so price is our boss, it's telling us what it wants to do. Yeah, but then today it was such conditions normally difficult, so you guys heard me say that it's really difficult, and that's the reason why even my risk threshold was really low. Yeah, it was really low. But then all in all, if you can come to the marketplace each and every single day and just study these signatures, check data, yeah, again by the end of second quarter we'll have enough, by Q2 we'll have enough data and everything will be fine. Just like right now we have enough data on trading the AM session. yeah, I'm trading the AM session. So I I have to go now, and you guys can have a good day. And let's meet during the New York AM session, and that will be live on TikTok. And maybe today we might be live on YouTube during the PM session, because I have the gut feeling that the which session, the New York AM session might not be good. So it might be good or might not be good. But then if it won't be good, then I'll be rooting for the PM session. So the PM session, uh, if it won't be good on the AM session, then I'll be rooting for the PM session. And so the PM session will be live here also. So we'll be trading live, we'll be streaming live on YouTube. So each and every single day, I normally live stream on YouTube, London session, and PM session. But then the AM New York session, I stream it on TikTok. But then with time, we'll be streaming all the sessions on YouTube too. So until then, see you guys and have a wonderful and a good time. Okay. So let's meet during the AM session. Yeah. So peace.